Hi everybody, welcome to Forex Analysis. This is Tuesday, March 27th. And before we get started, I want to do a quick risk warning. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided in this video is for educational purposes only and should not be construed as trading advice or counsel. So here we go. I want to do things a little bit different today before we're getting started, taking a look at equity markets. So over the past year, since the beginning of January, we've seen an extreme amount of buying from the equity market. We've seen people starting to believe in the U.S. economy again and starting to push it up towards all-time highs. So the S&P 500 is one place that I like to look at for potential reversals in the financial market. So things that I'm seeing here in the S&P 500 is first of all overconfidence. I see not only in this chart but also online. I am very active on Twitter, and seeing people so confident in the market is a time when the major reversals happen, and the S&P is known for large sell-offs. So I think that in the near term we might see the S&P down to about 1350 conservatively, and if not, all the way down to about 1200. I have multiple reasons for this trade, a lot of fundamental reasons for this trade. This is building up credit. This is people buying stocks with money that they don't necessarily have, and when that bubble starts to burst, we see major selling, and the market is a lot less risky on the downside than it is on the upside right now. So just doing a lot of studying on equity markets today, my bias towards a lot of the pairs has changed. So looking at the videos from this past week, I've been preaching that the euro is headed up towards the 200 moving average. I still think that that's very possible. I think we could see a movement up towards there, but for now, I don't like to put in that trade just based on the fact that equity markets are looking at a major reversal. Also, one thing I didn't mention is an extremely bearish divergence on the RSI. We see higher highs here for the pair and lower highs on the RSI, which is a bearish divergence. So we should this does help to indicate that my bias towards the downside is going to be right, and I think that if it doesn't happen in the near future, we do seem to be at a very critical point for equity markets all around the world. So as you know, if people start selling stocks, they start buying dollars, which will push the euro down, and I think that the correction from these highs will start to take effect, and we could start seeing a push lower. These are going to be very long-term trades. This video is a little bit longer-term based. I think for day trading, it's going to be hard to pick an exact top. So just realizing that a potential reversal is in sight, it is going to be easier to trade it. So just longer-term levels, I like to throw on this Fibonacci. Longer-term Fibonacci still hold. I love to see the price is still below the 50% Fibonacci. I think that the median price is always extremely important. If we push above it, it usually means that we're overbought or oversold. Or if we're overbought, if we push above it, and if we push below it, it means we're oversold if the trend is up. So that's one thing that I'm looking at for the euro. If we do start to close above this high in the next week or so, then my bias might be changed. But really, I'm pretty confident in a correction from the S&P and the major stock indexes. So if you are going out and putting a lot of money in stocks, don't take it from me, but I think that we could start to see selling from from the US stock market. So a couple pairs that I'll be looking to benefit off of that from is right now is probably the pound is the one that looks the best to me. So taking a look at the dailies, we haven't pushed above this level. We closed back below it actually. The high was at 1.59579, and we closed back below that today. We did see a small down move. There was basically no action today, which again points to fear and uncertainty from different investors. So one thing that I do like to see from the pound is RSI over 50. A couple of the other pairs like the Aussie, I would be looking toward the downside, but since the RSI is so close to levels that indicate oversold conditions, I don't quite want to place a trade in yet. I think that the pound right now, even though the 1 hour charts is in the oversold, I think if we do see, sorry, was I at the wrong chart? Yeah, sorry about that. The pound is actually around 50, so if we do see a small push to the upside, I'll be looking to sell up moves, and we could see a pretty strong down move from the pound if people do start to buy the dollar and sell their equities, just like I said. So this is a little bit of a longer term picture of where I think the dollar is going to go. I think eventually the dollar is headed up. Like I said, it might not happen tomorrow, it might not happen the next day, but I do think that we are in for a correction. And I don't like to be the one that picks tops, but the fact that we are in such a strong bearish divergence and we are overbought right now on the RSI is something that I look at. So those are a couple things this week that will help me put in my trades, and I hope that you have a good time trading this week. And if you want to follow us for more information, at SynergyFX, we'll be posting updates throughout the week. And thank you very much for watching, and good luck trading.